Hello traders, welcome back to Simply Forex. Hope you're all well, guys. As you can see, I'm not on my own today, so we are joined. All well, guys. Okay, as this all being repeated back. Sorry, guys. Yeah, technical difficulties. So yeah, as you can see, guys, I am joined by Luke from LAGFX. Luke's been trading for about 6 years now. And he's here to share some ideas about the charts, his strategy, what he looks for in a setup. So Luke, hello, mate. Welcome to the channel. How are you?
Thank you very much for having me. Yeah, I'm great. Thank you. I'm great.
Good. And Luke, how long have you been trading now?
So I've been trading for about 6 years.
Right.
Started when I was 26 now. Okay. So started when I was about 20. I've always kind of been interested in the financial markets from a young age. But yeah, I'd say I really started to learn how to trade from the age of 20. Yeah, it's been a good journey, a long journey, a journey that's come with a lot of lessons. But yeah.
Yeah, and I can relate to that, Luke. These lessons normally involve loss of money. Is the problem with trading?
Yeah, absolutely.
Yeah. No, I feel you on that one. Guys, yeah, in a minute we're gonna sort of ask Luke a few questions and get to know him a bit better as a trader, and he's also, like I say, going to share his strategy. Let me just have a quick look, see who is in the house. Say hello to a few of our regular viewers. Don't be shy, guys. Come say hello. Say hello to myself and Luke. Sabat, how are you? Colin, how are you? Renewable Nat. Hey Tom. Hi guys. Brett. Afternoon, Brett. So I hope you're all well, guys. Hope you're all having a good trading day. I really like pound US dollar at this level right now. But anyway, guys, yeah, if you enjoy Luke and what he's going to discuss today, then please don't forget to subscribe to our channel. But Luke also has his own channel, LAGFX, which you will see below this video. All right. So if you do like what Luke has to say, I'm sure you will, then please go join his channel as well, guys. What else do I need to mention to keep the editor happy? The editor is mental, so I have to keep him happy. As you can see above my head, guys, we have partnered up with My Flash Funding. All right. So we've partnered up with a prop firm because that's what you wanted, guys. All right. And right now you can get 23% off using code SIMPLY. All right. So please use our link, guys, and our code. So we can continue to keep offering you partnerships and promotions like this, guys. All right, so check it out. We're also running 50% off our VIP Discord right now as well. Right, Luke. So yeah, let's get stuck in. So Luke, how would you describe your trading style? Would you say you're, scalper, intraday, swing trader?
Yeah, so I would say it depends really. I mean, I'm more, I would say, an intraday trader and a swing trader. So I actually look at multiple time frames when I am analyzing the markets, and I like to go down on the time frames to really refine my entries. So my take profit targets are usually set as a swing trader, but my stop losses and my entries are quite precise and quite specific. I look at order flow in a market, so everything based on supply and demand, and I find areas in price, order blocks to be specific, and yeah, like they are usually found on the lower time frames. That's where I try to find these areas, and then what I do is I look for breaks of structure in and around these areas of interest to kind of give me the confluence that a reversal is taking place. So I don't look for a breakout. I don't look for obviously consolidation within that phase. I'm looking for rejections in these areas. But yeah, it's basically all just based on supply and demand, the order flow in a market, and then just a few things that I look for in terms of confirmation to actually place that position. So
okay, all right. So a lot of similarities with the way I trade, Luke. I'm looking for, I do call it a top-down approach. Absolutely. Look at the weekly, daily, and then sort of enter on the lower time frames for precision, basically.
Exactly that. Yeah. Yeah.
And, you know, we're looking for breaks of structure, retests, you know, this kind of thing. So, yeah, brilliant. How many setups would you say you get in a day or a week?
Okay, so for me, I'm all about quality over quantity. So I'll be completely honest with you. I would say anywhere between 3 to 5 opportunities a week. Sometimes there's none. It completely depends on the market and what's really shouting out to me. For me, as I say, it's all about quality over quantity. So I'm looking for as much confluence as possible to enter a position. I want as much probability that the trades I am placing are going to follow through and be profitable. You know, I'm very, very big on managing my risk. And yeah, so I would say anywhere between 3 and 5 trades a week. That's probably a max. I would say when I was first starting off, I was quite maybe not so preemptive, but I was eager. I just wanted to be involved in the markets a lot. So I was I was almost forcing opportunities where I think as you become a veteran in this field and you become more knowledgeable, it's about understanding it and refraining from those impulsive decisions, isn't it? So yeah, I would say 3 to 5 trades max a week.
Yeah, couldn't agree more. Yeah, it's all about quality, not quantity, and yeah, sit on those hands. If there isn't a, you know, an A1 top notch, you know, grade A setup, you know, don't take it.
Exactly that.
So yeah, couldn't agree more, Luke. Again, you know, very similar to what we preach here on, you know, Simply Forex. What we talking in terms of risk to reward and trade duration? How long are you in a trade? What's your risk to reward? Typically?
So a must for me is to have a risk reward of at least a 1 to 2. So I want to be gaining back at least double of what I'm risking. That's a must. In terms of duration of a trade, I suppose it depends on how big the swing is, how big the leg is that I'm taking part in. Sometimes I'm in and out of a trade within a day. Sometimes it's a few days. So again, it depends on the setup, I guess. But a must for me in terms of risk management is to at least have, if I'm risking 1%, I want to be gaining back at least 2%. That's an absolute must. Obviously, the beauty of, you know, finding or completing a top-down analysis and looking at the prevailing trend and then actually finding specific areas to enter in on the lower time frames is I'm able to refine my stop loss, but actually have quite a large take profit, which obviously increases our risk reward ratio. So, yeah.
Yeah, that's what we want. Tight stop losses because the market allows it, you know, and yeah, you know, large area for price to move into. Also, Luke, you know, if you know, what are some of the things that you would say are your strengths in trading, and what things, you know, as you were learning, what are some of the strengths that you had, and what are some of the things that you perhaps took you a while to learn or were difficult to understand? Because we've got, you know, traders from all levels watch the show, and they're interested in knowing your journey and what obstacles you overcome, you know, that type of thing.
So I think for me, like I think a strength of mine is I'm quite good at following a system and a plan. So if people out there are the same, I would say learn a strategy and have a trading plan and stick to it. If you're someone that's good at sticking to rules and things of that nature, then great. That side of things is going to be very easy. But I would say the thing I struggle most with, which I think is quite a common theme, is the emotional side of things, the psychology that's involved in trading. Yeah, as I said, when I was first starting out, I was quite impulsive and I wanted to be involved in the markets at all times. And I felt like I was almost forcing the trade. So as I said, I can follow a trading plan, but it was like, would I count this as a break of structure? Is this another piece of influence? Do you know what I mean? So it was about refraining and actually refining my trading plan and learning to control my emotions. You know, when you lose a position as well and trying to re-enter to gain back losses, silly things like that, silly mistakes. So, you know, the psychology that's involved, I think, was definitely a challenge. But over time, I think that comes. Yeah.
Is the cost of not following your plan. You know, it immediately leads to bad trades and a loss of money. You know, I always say, you know, if you feel like you've been impulsive and jumped into a bad trade, you know, track the cost of that bad trade.
Yeah.
You know, it's cost you 1%, if not more.
Mm-hmm.
All right, cool. So, yeah, good to hear about your backstory there, Luke. And yeah, I mean, what we're going to do now is, guys, if you've got any questions for Luke, then please feel free to fire as many questions as you like. Luke's going to take you through, like I said, his system and what he's looked for. He's looking at a trade right now. So, Luke, yeah, take it away and then answer any of the questions you would like to. All right.
Perfect. Okay, so I mean, I'm looking at the US dollar CAD at the moment. So what I will do is I'll go down. Well, I'll go up on the higher time frame. So obviously we complete a full top-down analysis. This is something I do every Sunday, and this just ensures that I'm staying in tune with what's actually going on in the markets. So once I have found my overall bias by looking at the higher time frames, and I understand the prevailing trend, it's then important to go down on the time frames and obviously refine what it is that we are looking at. So if we just head to the 3 months, we can see here that realistically price, we get a push tool, we have a low set here. This, I would say, is an equal low. But then what we have is a high here, and then price is within what could be either another impulse that's trading us higher, or it could be a next leg lower. So what we need to understand and what we need to look for is the most recent leg, which would be this one on the higher time frames, to see where price here, it looks almost as if price is correcting itself and maybe a move downwards. But it's obviously important to get the overall look of a market. And when I'm looking at this, it seems as though price could be trading in what seems a bullish way. Now, you'll notice that my analysis that I performed when I had it on screen just before is actually to go short. And this is because this is in line with the current phase in the market. So we keep in mind what's going on in the higher time frames. And as we go down, we then look and digest the information that we've got. So just looking at this here, I can see that if we just mark this out, well, this area here, right, I would say there is bullishness present in this. And the reason why is because there is a wick to the downside followed by a wick to the upside. Now, this suggests a hidden order block. And the reason for this is because for price to come down and create price to come down to this point here, and then for price to then come back up to close, that would suggest that there must have been bullishness present. Then what's happened is we had the open here. Prices continue to trade higher before then trading lower. And then we have this inefficient structure. So a wick to the downside followed by a wick to the upside, to me, would be a sign of bullishness in a bearish leg. So as we go down on the time frames, I'm just going to highlight this out, and we're going to see if it actually does present what looks to be an order block. So just go highlight this out here. We go down to the weekly. You can see here how those buy orders start to present themselves to us. And this is what we are looking for. And we want to see whether price absorbs this, continues to trade higher, in which case I wouldn't be looking to get involved because I look for rejection, or price trades in and rejects to the downside, which is what we want to see. So price has obviously traded up. We've had rejection to the downside, which is great. Now, when we look at this, we can see that this high comes lower than the last one. And we are also seeing how we seem to be breaking these lows. So now, and if you look at this as well as a whole, it seems as though price is distributing. So it's in preparation for a down move. So this is obviously absorbing orders, offloading any buy positions, and introducing short positions. So we can see here that we've obviously breaking these lows, and it looks as though price is starting to put in bearish structure. So we've had the penetration of an order block here. Now what we need to do is look at the last impulsive wave that traded into that, which would be this one. We will look at the low that was created. That would mark the last protected low within any bullish structure. This low has been broken. in the creation of a lower low. So I'd say this would be considered a break of structure. We then look at the impulsive wave that broke the structure, and we rinse and repeat the same process. So you can see here, if I zoom in, we have another wick to the downside followed by a wick to the upside. So that would tell me that bullishness would be present. I go down to the daily time frames, and again, you can see how those buy orders are starting to actually show themselves. So again, what we look for is we look for price to trade in, for buy orders to be offloaded, for sell orders to be introduced, whether there's pending orders there. Obviously, institutional control, so we want to see some kind of break of structure to the downside after a penetration in this area. So we would mark this as our last high. Let's have a look. So we are basically seeing now how price is distributing. So now I just want to see the introduction of further bearish structure. So we can see how price is traded into this. We're starting to kind of see how we are respecting areas of supply and disregarding areas of demand. So we are breaking these lows. And I basically, as I've obviously gone down on timeframes and I've looked more at current data, I'm seeing that price is respecting these areas of supply. And now I'm wanting to see price actually trade up and into this. So we could say, for example, we could say here, we just zoom in, this would be considered an order block. This green candle here would be considered an order block. Price needed to trade up and into this. We've seen that price hasn't yet penetrated this area in price. But as we just zoom in, if I go to the 4 hours, it might show itself. Yeah, there we go. And you can see the order block really shows itself there as well in the 4 hour time frames. But now I'm basically wanting to see a continuation in this bullish correction for price to trade in. Obviously, any buy positions that have been placed within this bullish correction to be closed, so offloaded, for supply to be introduced, and for that S&D balance to flip. So the markets is all based on supply and demand, and I look at it as an old school weigh-in scale. So maybe something like this. This is a rubbish drawing, but we would look at this as like supply and demand. And we look at this as a weigh-in scale, and when price trades into these areas of interest, the weight is offloaded in some areas and introduced in others. So this is obviously a supply zone. So we're wanting to see supply introduced. If there's more supply in the market than there is demand, we expect the value of that currency pair to depreciate. So by price trading into this area, I'm obviously wanting to see some kind of break of structure. So what I've done to get involved in buy positions into this area in price, I marked out the last order block, demand order block that I found. Price has actually traded into that, and I can show you my trading view analysis for the before and after, so you can see that this analysis was done prior to this here. But you can see how price is traded in, and it looks as though it's going on to create a new higher high within this bullish structure. Once we have that penetration, that's where I'll be then looking for a break of structure. So if I just move this. If this leg here goes on to create a new high, this would be the last protected low. So we'd want to see a break in this low, as this would tell us that we're no longer following the laws of bullishness. Because as we know, in bullish structure, we break the highs like so, and we protect the lows. Now, in the laws of bearish structure, we break the lows and we protect the highs. So when we start to see the laws of bearishness being introduced, so as I say, if price trades up, break structure, breaking the last protected low, we are now following the laws of bearishness. And we therefore don't want to be, we therefore have the suggestion and the confirmation that price is, as I say, no longer following the laws of bullishness, but now following the laws of bearish structure. And we have that confluence that price is probably looking to reverse. Don't know why that's not working. I want to do that.
Luke, if you don't mind, I'll just ask a question, and it's not easy to draw with a mouse pen. I feel you on that one. No. If price didn't make it to that grey zone, okay, the higher grey zone, the resistance level,
this one here,
and and it still broke down, would you still take that trade, or does it need to enter that grey zone first?
For me, it's I suppose no, I probably wouldn't. If I'm being completely honest with you, I wouldn't. I want to see price trade into. So if price didn't actually reach that zone and we saw a break of structure to the downside and price started to trade lower, then I would say that was an opportunity missed, because I've probably missed something in my analysis. So there may be an order block lower down that price is actually traded into, and that gave enough supply to actually flip the market there and then. So I would say no, that's an opportunity missed. So I would. This is part of just like how I would trade. Like I must see price trade into an area of supply or demand before I even look to take part in the market. Obviously,
sorry, Luke. Go on.
I was just going to say, like, obviously, you know, we see structure break fractally all the time, but price trading into an area of supply or demand like this, like that is just one piece of my confluence. Obviously, I look for a penetration of an area, break of structure to the downside. We then want to see a correction, things of that nature. So things follow in correlation, but no, I would say this would be an opportunity missed. The price has started to trade lower now. I wouldn't know. I think that would then bring those impulsive trades back.
Right. Yeah. Sure. I understand. And another thing. Some people, you could argue your entries that they're like mine, but they're conservative. You're waiting for a break of structure. Would
Absolutely.
you, if you on a higher time frame and you've got a very bearish, let's say a daily bearish candle that reacted in that grey zone, your area of resistance there, would you trade solely on a bearish higher time frame candle, or does it have to be the structure break included?
So if we just saw, so if price traded in now and just gave us a large candle to the downside,
like even say a bearish daily candle, but we didn't get the structure break at that level, would you just trade on the back of a very bearish candle?
No, because again, there's been many occasions where that has happened, where price may come down from an area in price, and that's just a manipulation of the market. And then what we see then is price then shoots up again. Do you know what I'm saying? So for me, like it's very important that I follow my plan in that place, and I wait for some kind of structure break, because that tells me that any liquidity or any demand that may have been set from these previous protected lows is now cleared, and that supply and demand balance has flipped. Do you know what I mean? So for me, no, I would definitely wait. That's just me personally, but I would wait for a break of structure in or around that zone from a protected high or low, depending on the direction. But yeah.
Okay. All right. And sorry, look, carry on. I mean, what are you looking for in terms of a trade here? Are you in any trades currently, or anything setting up?
So I was looking at GA. So I was looking at Great British Pound to the Australian dollar, but this was a trade that I was actually in yesterday, and I can run through this in just a moment. But as for this, obviously, I would want to see price trade in now, and then, as I say, if this was the last protected low, I would want to see that obviously break. So we'd have like a break of structure here. So if I just do this, so it looks a bit better for us. I would want to see price trade in for structure to then break to the downside, as that would be that would give me the confluence and the confirmation that this bullish correction here has finished, and a new impulsive wave is ready to take place and trade us lower. And then what I'd be looking for is a corrective wave to set that first initial lower high before obviously continuing to trade us lower in the market. So we're just rinsing and repeating that same process. So again, what I would do is I'd look at the impulsive wave that broke the structure, and I'd try and find an area of supply for price to come back up, to correct itself, set the lower high before then continuing to trade us lower. And then, this would mark the break of structure here, like that. And then that would be my confirmation, because this first break of structure here tells me that this higher time frame bullish correction is finished. Then once price trades up and into this, we'd obviously look fractally at this, and we look for another break of structure here. What that second break of structure tells us there is that this initial correction of the new impulsive wave trading as lower has finished, and a new trend trading as lower is ready to take place. So that's what I would look for in terms of confirmation.
And where's your stop going there, above that last high in the grey zone?
Absolutely. So my stop loss and take profit would be, so I would actually place my stop loss here.
All right, okay.
And my take
not above that last high on the other grey zone.
This one here.
Yeah.
No, because for me, I would say that if price has broken structure to the downside here, this corrective wave here is finished. That's enough confluence to suggest that this corrective wave is finished, and that a new impulsive wave is ready to take place. So we would say that this was an impulsive wave, a corrective wave, impulsive wave. So we obviously look at this corrective wave, and we look at the last protected lows, or the lows that are being put in. And as soon as we've had a break in that, I would say, right, well, this must be finished in order to create a new impulsive leg taking us lower. So obviously I would place my stop loss just above this. As realistically, if we were to follow the laws of bearishness, we obviously protect those highs, and this high shouldn't be broken, within the new bearish leg that takes us lower. And again, I wait for a break of structure fractally here to suggest an end to this, because obviously if I just entered based on a penetration and rejection, then it could just be a pullback. You know what I mean? We could just be having price pull back initially. So price could just trade in initially and then continue trading higher. And yeah, as you say, clear the rest of this. But that's why I wait for set steps. And obviously I want to see a break of structure in and around here to suggest the end of that corrective wave.
Okay, so that's the H4 chart, Luke. So you would want to see a structure break on M15, H1
yes,
at that level?
Yeah. Absolutely. And my take profit would be set just above this last low on the higher time frames, because again, if we look at the higher time frames, we say this was an impulsive wave, this is a corrective wave. The next leg that would take us lower should come lower than the last low. So this low should break to create a new lower low. So by setting my take profit just above this point, it doesn't guarantee a take profit hit, but it gives us a higher probability that it's going to be hit, because realistically, we should break that low to create a new lower low.
Yeah. All right, Luke. And then totally get this. Price action, support and resistance. Yeah, levels of supply and demand. Yeah. All right. And what else are you looking at? You said you was looking at potentially something else, Luke, as well.
Yeah, so I wanted to go short in this market. Again, I've had price trade into an area of interest. Let me just go. I've had a break of structure here. Let's push that up a little bit. Had a break of structure here, and again, looked at the impulsive wave that broke the structure to try and find an area of supply that price could trade up and into. I've had price trade into this now. So again, what I would do is I'd look at the last protected lows. We've had a break of structure here. This low created the highest high, so I'd say this would be a break of structure here. I did take advantage of this. Price traded into a demand zone, which I thought, okay, if price is going to trade into that, are we going to see the creation of the first lower high within this new bearish leg? So I did take part in longs. And then, now I was finding areas of supply within this that price could come back up to correct itself. I did actually enter short in this yesterday. I'm just trying to think where else it was. I did take part in some shorts in this yesterday with my clients. And obviously, I think we got like 3 RR from this. So I can touch base on my approach when it comes to partials and my risk, like how I actually manage a running trade in a moment. But we moved SL to entry, took a partial at 3 RR, and then price traded back up. And now we just go down. I am just wanting to see, it just looks as though it's distributing. I just want to see price create a new low now. So I've marked out this area again. Wick to the downside, wick to the upside. Price has traded in, and we have seen rejection to the downside. So again, we could say price has traded into this. We've got a wick to the downside, and then price has just shot down from this area. So I'd say that there was inefficient bullishness within this, and we've seen that price has traded into this as well. want to see a continuation in bearish structure. So I am looking for shorts on the GA. Whether it plays out or not is a different story. But we did take part in shorts yesterday, and it played out well. So I'm just wanting to see a continuation now in bearish structure.
Okay. And I see your charts are pretty naked.
They are.
So no indicators. You don't.
No, I feel like that's just more of a distraction for me. I like to just look at the chart and just look at price action. So as I mentioned earlier, I always complete a full top-down analysis every Sunday just to stay in tune with how the markets are playing out, and just to ensure that my bias is still the same, nothing's changed. And yeah, I just go. I have a few set rules. So obviously, always trading with the prevailing trend, always trading with the current trend, and then yeah, just looking at the supply and demand balance in the market. So order flow. Yeah, I don't tend to use lagging or leading indicators. No. I used to. You know, I think when I first started, like I would have the MACD, I'd have Bollinger Bands, I would have everything you could imagine. I mean, sometimes it's good to look at the Fibonacci and things like that, but to maybe build confluence. But I would always suggest, if you're someone that wants to use indicators, ensure that you've got like a good bias first, and you've completed your analysis based on order flow or whatever it is that you're looking at, areas of support and resistance, things of that nature, before then using those indicators. I think it's very important to. The mistake people make is they are too heavily reliant on indicators. And for me, like, that was probably another thing that I used to do when I first started. I was too heavily dependent on it, and I was trading decisions based on what indicators were telling me. And these are, you know what I mean? So
yeah. No, I totally agree. Look, yeah, you know, I always say, you know, you can use an indicator as a piece of confluence or build confluence, like you say. There's nothing wrong with doing it for that reason, but you need to understand trend, structure, what's happening in the market. And then if an indicator supports your idea, then great, it's another piece of confluence. But yeah, I couldn't agree more. I had literally every indicator known to man on my chart, you know, many years ago, and you just get lost, yeah, because one indicator won't work 1 week, and then you'll tweak it.
Absolutely.
And then what, you're just chasing your tail. You never know if you have a system that works because you're constantly tweaking the indicator. So, you know, yeah, it's a bit of a chasing your tail scenario for me, indicators, to be quite honest. All right then, Luke. So yeah, brilliant. Really enjoyed your analysis. We've got lots of questions coming in. Can you see the questions, Luke? So if you scroll down, take a look. Any questions that you want to answer?
Okay, so hello, how do you manage risk? Is there a certain percentage? Then you stop the trade. Thank you. Okay, perfect. That's a good question. So for me, I will take, when it comes to risk, I always risk 1% of my equity. I think that's just a given. I would never recommend risking more than 1 or 2% of your equity per trade. Me personally, I risk 1%. And when it comes to managing a running position, when a position goes in 3 RR worth of profit, so if the trade is running in 3%, I would look at taking a partial of 33%. And the reason for this is because I'm then walking home with, I've banked 1% initially. After
when you say a partial, you mean you're going to close some profit, take a third of the trade off? Yeah,
exactly that. So if I had one lot traded on a short, I would close 0.33 of a lot, and that way I'm banking 1 RR essentially. That gives me 66% of my position left open. So now, worst case scenario, if price was to hit stop loss, bearing in mind we're only risking 1% initially, with me closing 1%, and having 0.66 left open, we're still going to walk away with profits regardless of the outcome. Now, if we were to move stop loss to entry, which I'll go through in a moment, when I move stop loss to entry and when I trail my stop loss, But if we were to move stop loss to entry, then we're guaranteed to walk away with 1%. So that is a rule that I always stand by, is to take a partial for 33% at least at 3RR, and then the partials after that, I suppose, will all depend on how the market plays out. But when it comes to obviously trailing, I mean, does that make sense as well? By the way, did that make sense? I kind of like went through quite quickly.
No, yeah, that's, you know, again, that's what we do. You know, I close a higher percentage of the trade at 1:1. So I close around 80% of my trade at 1:1, and then 20% run. But then I don't move my stop to break even, because by doing that, I'm not trading the chart. I'm trading my P&L. So, you know, but you know, you know, but partials is the, you know, it just makes total sense, you know, because my view of it is also the market may retrace and you can enter again.
You
know? So I've closed.
Taking a partial, you can then re-enter for what you've partialed.
Exactly. Yeah. So yeah, you know, there's take partials, take some profit. You know,
absolutely.
I say that every single day. But sorry, Luke. Yeah, you carry on. That did make sense, and I'm sure it did to the viewers as well.
Okay, hopefully, yeah. It just, as you say, it just banks profits, and if you've, you know, if it's at least 33% or even 50% at 3RR, then, you know, if it's 50% at 3RR, then you're banking 1.5%. with a risk of 1%. And then if price was to retrace and hit stop loss, then you're still walking away with 1%. So you're walking away with what you've risked initially. If you put your stop loss at entry, obviously dependent on your strategy itself, then you're walking away with 1.5%. So yeah, as you say, I would say partial, and it's a given.
And from a psychological point of view, you know, it's just easier to let the trade run.
Yeah.
You know, because you've secured some profit. It's almost like, you know, not a free trade is the wrong way to describe it, but you're at ease with the trade and letting it run.
Exactly, yeah. Because because you know now, regardless of the outcome of this position, I'm either going to walk away on top, or I'm going to walk away at break even, depending on how much of a partial you've taken. So as you say, yeah, you feel more at ease. You can go on with your day. You don't have to. You're not staring at your screen, checking the trade and things like that. Yeah. So yeah, no, I agree absolutely. Yeah, and the only other thing in terms of risk management risk management, certain percentage of stop at trade. Yeah. So for me, in terms of like trailing stop losses, if I entered short from an area of supply, obviously we want to see that break of structure, brilliant, and then we want to see the introduction of bearishness. So as soon as let's say that I entered short here, as soon as a low had been created, followed by a lower high and then a lower low, that would tell me that this is now the new protected high, and then we can start to trail our stop loss. So the reason why I do this as well is because if the market continued to trade bearish, but then decided to actually trade in the opposite direction and, you know, go on to correct itself, at least by putting our stop losses above these protected highs, we are closing out and banking profits just as the market reverses and starts trading in the new trend, or trading against us, essentially. So this is obviously it's a good thing to do, but if we are trading, I've noticed when you trade for the likes of me, like when I'm obviously trading fractally for a higher time frame swing, we do experience changes in trends within a large swing on a higher time frame. So the only problem with that is price may never actually trade back up and into your entry point or your stop loss, but may just be correcting itself initially before continuing lower, you know, doing that fractally before trading lower. So that was the only thing really. But if price was to go on to trade and hit stop loss, then at least we are banking profits at the most pinnacle point and profitable point before price reverses. And as you say, it gives us the opportunity to re-enter anyway. So if we then look and re-enter based on areas of interest that we've seen within that previous impulse.
Sure.
Do you trade all 28 pairs, or do you set amount of pairs you trade, or do you have a set amount of pairs that you trade? So that's from Brett. Me personally, I just stick to a few pairs. I don't like to overcomplicate things. I don't like to have too many eggs in one basket. I just like to I stick to a few pairs that I feel I trade best on within the time frame that I'm trading. I trade through the London and New York session, so I look at specific pairs. I look at the Euro US dollar, Great British pound pairs. I like to trade gold, and I've started to trade the CFD NAS. So yeah, there's just a set few pairs that I do trade. But I think if you find a few pairs that you seem to be consistent with and that you're enjoying trading and that offer the right amount of volume and flow with the analysis that you're performing and your strategy itself, then I would just stick to those. But that's my opinion personally.
I do 28 pairs, Luke. I'm a maniac.
Really?
But I only have, 1 or 2 trades a day because of the top-down approach.
Yeah.
By looking at weekly and daily, I quickly eliminate 24 of the 28 currency pairs anyway. So I'm not looking at all of them all day, obviously. I will narrow it down to 1, 2, 3 or 4, just from weekly, daily analysis. So
I suppose that's not a bad thing, and I'm not saying I'm not open to looking at other pairs. Absolutely, because what I do see is I will do analysis every morning anyway. But a Sunday for me is kind of like it's just before the open, and I like to just look at the charts, get a really good look at what the markets are setting themselves up to be like. So for me, like when I do my top down analysis on a Sunday, I will just find a few pairs that I feel right. These hold very good potential for the coming week. Do you know what I mean? So I kind of set my watch list on the Sunday before I trade the market. So I'm definitely not disclosing to trade other pairs. But I would find a few pairs, as you say, like you do the same. You would look at the whole 28 pairs, and you would then eliminate 24 of them. So I just do that, but I do that on a Sunday. Do you know what I mean? So for me, I have like my watch list for the week, and then I say, right, okay, and then I focus on those 4 or 5 pairs that I've got in the markets. Do you trade prop firm capital or your own money? My own money. I trade my own money. I think this was a very important journey for me in controlling my emotions as I was building my equity and the money I was trading. It kind of taught me a lesson with my emotions. I trade my own funds. I think if you were to, I'm not against prop firms and things of that nature at all, but I think you've got to be able to, don't even know how to explain it. I think it's just from trading, say £500 to then getting funded for 100,000 or 200,000. That's gonna, you know what I mean? It takes a bit of adjusting. So for me, like I enjoyed that linear journey as time went on. So I trade my own equity. But I've got many clients that trade with prop firms, and they're doing extremely well. I think it's definitely a way in now, and I'm seeing a lot of people. I've got quite a few clients that are. Some of them are trading with more funds than I've got. So it's one of those. It's each to their own, I guess.
Yeah. And on that note, Luke, this is a perfect segue in. If just above my head, guys, you can see our partnership with My Flash Funding. All right. So, guys, if you are interested in taking a prop firm challenge right now, then please check out the link below. And we are offering 23% off every prop firm challenge that My Flash Funding do using code SIMPLY. All right, guys, please use our link. Please use our code so we can keep offering you these partnerships and promotions. Sorry, Luke, back to you.
Let me just have a look and see. Do you also no to that one? Does candle pattern play any role when you're entering trades, like if they are respecting last protected highs or lows, or grabbing liquidity by leaving wicks, but candle closing below respecting? Okay, does candle patterns play any role when you're entering a trade? Yeah, they're respecting last protected highs. Respecting.
Maybe like a bearish engulfing candlestick.
Oh, right.
I guess that's what the question is.
Yeah.
Do they come into your thinking?
Yeah, I would say so. Yeah, absolutely. I don't see why. The funny thing is as well, this actually wouldn't be a bad thing to touch base on, but when we see patterns in a market, like, I don't know, a head and shoulders pattern, that's obviously a distribution, but that's also represents a break of structure. Like, I feel like there's a lot of terminology and there's a lot of things within Forex that actually have the same meaning, but it's just said in a different way and explained in a different way. So yeah, absolutely. It all depends on how you view the market and how you're looking at the market. So yeah, I would definitely, like, if I saw an engulfing candle in and around an area of supply or demand, then yeah, I would say that's an additional piece of confluence. But I'm still looking for breaks of structure. I'm just very strict with my trading plan as such. But yeah, patterns in the market, they are often shifts. Like when we look at an inverse head and shoulders or a head and shoulders, that is just showing the last two highs. So if we're looking at head and shoulders, the last two highs and lows within a bullish market, and then the initial lower high of a new bearish market, and that break of structure. That's all that is. So when we're looking at these patterns, they are actually just meaning other things in that sense. Do you know what I'm saying? You know what I mean?
Yeah, they're like confirmation of what you were already seeing.
Yeah, exactly.
You were seeing a level of support resistance, and it just so happens that it also looks like a head and shoulders pattern.
Exactly that. It's just different ways of saying what things are doing basically in the market.
Yeah, sure.
Luke, thank you very much, Noor. Luke, do you trade the news? No. No. Trade the news.
Next question. Yeah, me neither, really. I haven't said that. We're trialing a news straddle where you place price, a buy and sell entry, so many pips away from a big news event. Let's say an interest rate, and it takes your buy order or it takes your sell order, and obviously it's a very quick turnaround in terms of a trade. Yeah. So we're actually we actually have tested that in the VIP Discord, and it's got brilliant results. We've got like 4 out of 4 so far. So yeah.
That's good. Yeah, no, for me, I'm just I'll be honest with you, I'm a bit too scared. Like the likes of the NFP and things like that, like I tend to avoid trading. And this is another thing. This is part of my trading plan. If there is news that's due out that could impact a trade that I'm looking at placing, then I will either wait till the news has passed, or I will have safety measures in place, and I will ensure, like, if I am in a position that my trade is in big enough for profit that it's not going to take a hit, because obviously we see jumps in the market and things like that. Do you know what I mean? So I don't want to be caught out on that. Not at all.
No. I like to if I'm in profit, close some profit before the news, move my stops down, and protect yourself.
Yeah.
I just wanted to point this out. So guys, who said that? So Noor said, Luke is a great teacher. I learned a lot from him last year when I started trading. So guys, if you've enjoying Luke's analysis of the markets, then please check out his channel. You can see the link below, guys. All right, so go join Luke's channel if you enjoy his analysis, LAGFX. Any more questions, Luke, you would like to look at? Can you take more?
Can you take more than one trade at once, or after you secured your 3 RR, then you can take another? Yeah, no, absolutely, yeah. So as you mentioned earlier, Tom, it's all about taking that partial is brilliant because it's securing profits, and it kind of gives you that reassurance, and that you can kind of sit easy, but also it gives you the opportunity to re-enter. So for me, like I have a set risk with every position I play. So if I was to close 33% of my initial trade, then I'll look at re-entering with that 33% if price traded into an area of interest.
Yeah, sure. Okay, all right. Well, Luke, thank you very much. And guys, if you've enjoyed Luke's analysis, like I say, go check out his channel, LAGFX. And if you enjoy, you've been enjoying the interview, the live stream, then guys, also come join our channel. Yeah, subscribe to the channel right now. Also smash that like button. It really helps support the channel. Also, guys, don't forget 23% off any prop firm challenge with my flash funding right now using code SIMPLY. And also, guys, our VIP Discord channel right now, we're offering 50% off the yearly subscription, guys. So check that out as well. The editor will put all the links below. And he is mental. I was correct about that. All right, so Luke, we'd like to thank you very much for your time. Hopefully see you on here again sometime. Yeah, it's been really good, mate. Thanks a lot.
Perfect. No, thank you very much for having me. And yeah, you'll definitely have to make an appearance on our channel, whether it's a Sunday session video or something like that. We'll have to sort something out, definitely.
Cool. Definitely will do. All right. Cheers, Luke.
All right, buddy.
See you,
Thank you very
guys.
much.